Hi there, Miranda Alt here with Keller Williams Success Real Estate and the Miranda Alt team with your Monday market update for Monday, October 14th, 2024. It is chilly outside. All of a sudden it's fall. Was not ready for that. We've had such an easy October. Oh my goodness. It's been like summer for the last 3 weeks. I kind of forgot that it was October, and all of a sudden we're in the middle of October and I'm like, oh, it's too cold. Oh wait, it's October. It's supposed to be cold. So anyway, getting a little shock to my system this morning. Let's take a quick look at our Montgomery County numbers for the last 7 days. We had 134 new listings, 130 under contract. So that gap between newly listed and those under contract is getting a little bit smaller. We only had 4 more listed than went under contract last week. 73 closed sales, 53 price changes, 1 on the expired list, and 32 currently on the private network. So markets are closed today. Happy Indigenous Peoples Day. The kids are off school, banks are closed. So we don't have any updates on our interest rates, but they have been ticking up. So interest rates, mortgage rates, I should specify, are an interesting thing. When the federal government cuts interest rates, they're cutting the prime rate. I've talked about this before. That's interest rates on short-term loans. So the short-term loans got cheaper. That's like your boat loans, car loans, home equity lines of credit, things like that are going to be a little bit lower than they were. Mortgage rates follow the 10-year treasury. So they actually went down leading up to the Fed's meeting, the Federal Reserve meeting, and we're down the lowest they were at in the recent 18 months history. They were lowest on 9/26, so September 26th, they were lower than they are now. They've actually ticked up the last couple of weeks, and interest rates are now at about 6.32. Now, why did they go up? Everybody's been talking about interest rates going down all year, myself included. But what happens often after the prime rate goes down is that takes inflation back up. Because if car loans go down, what are some people going to do? If they've been waiting to buy a car, they're going to run out and buy a car, right? Well, that means that all of those things are going to lead to inflation going up. So inflation is around 2.7%. So it's around where they want to be. They want to be at 2%. Federal government would like us to be at 2% inflation rate. We had inflation, so that ticked back up. But then we also have unemployment reports, which are positive. So what we would need to have interest rates come down more, and when I say interest rates, I mean mortgage rates. There's lots of different interest rates, but when I'm talking about we want mortgage rates to come down, we would need a weaker economy typically, and we would need unemployment numbers to go up. So right now we've got inflation at 2.7%. We've got unemployment pretty good. Everybody's got a job. Unemployment remains pretty low. We've got some really good job numbers that, people are working. And in that situation, we are not going to see mortgage rates come down. We are going to see them go back up. So, there's not really a scenario right now where we think that interest rates are going to continue to come down. Now, they're still 1.2 points less than they were this time last year. So interest rates are lower, right? This time last year, they were at about 7.75%. 6.3 is far better. So they're better, but to anticipate rates coming down dramatically through the end of the year, I just don't know. I was talking to my favorite mortgage guy, Eric Shorter, this morning, and he was saying that he just doesn't see the environment where the interest rates are going to come down. Not when inflation is at 2.7%. That's pretty good. It's not where they want it to be, but it's pretty good. We've got unemployment is holding steady. It's not going back up. We got a strong economy. It's not likely that we're going to see interest rates come down. So that's what's happening there. Now, this is a normally slow time of year for us in the real estate industry. We've got people kind of more focused on the holidays, thinking, they're kind of thinking more towards the spring. But we do have some people that are still thinking about selling their homes. Maybe they were, trying to get their home ready all spring, all summer, and now the time is right. What a lot of people think is that in the fall and the winter, we don't sell any homes, they're like, oh, the housing market is dead. I don't go on vacation between now and May. That's not what happens. People still need to move. So we always have people who need to move because of marriages, divorces, death, having babies, all of those things, job transfers. Those are the things that motivate people to move, and those things happen year round. But right now, we don't have people who are moving just because they wanted to move. We don't have like sort of that seasonal. That tends to follow more of the school calendar. So that's why the spring tends to be a stronger time for people to move who have the option to move. They don't have to move, they just want to move. So people will tend to wait for spring to line up with the school calendar. But right now, I would say that we are seeing it slower than normal. Now, 2024 has been a very slow year for real estate in general. Yes, there's not a lot to choose from. We have very low inventory. We're still holding at about 1.2 months inventory for Crystal Lake, 1.2, 1.5, and the general area is all in that sort of range. So we have very low inventory. So there's not a lot of homes on the market. But there's also not a lot of buyers in the market. Now, there's still less homes for sale to meet the demand of the number of buyers in the market. So there's still more buyers in the market than there are homes for sale. So we have very low inventory. However, all of it's low. All of it. 73 closed sales. That's low. The week before we had 118, 122 the week before that, 103 the week before that. Historically speaking, looking at past months or past years, in 2023, we had 96 closed sales this week. In 2022, it was 102. In 2021, it was 138. So we just have a very slow real estate year in general. Now let's take a look at prices, right? Average sales prices for October of 2021, the average sales price was $319,000. Now, some of you in 2021 were coming up to me and saying, Miranda, these prices are crazy. I'm not going to pay this for a house. They've gone crazy and I'm going to wait for prices to come down. What has happened since then? That was October of 21. We had $319,000 was the average sales price in Crystal Lake. In 2022, people were still saying, oh my gosh, these prices are crazy. Prices were average sales price in Crystal Lake in October of 2022, $348,000. So 319 in 2021, 348 in 2022. 2023, average sales price in Crystal Lake, $366,000. What is the average price right now? $392. It has gone up about $70,000, the average sales price in Crystal Lake in 3 years. So, do you think that you might want to buy a house now rather than waiting for next year? Because in next year, it's probably going to be another, I would say it's probably, based on this trend, it's probably going to be about $420,000 average sales price in Crystal Lake. And the other cities are the same. Cary, the average sales price in 2021 was $306,000. In 2022, it was $323,000. In 2023, it was $339,000. And right now, it's $372,000. That's a big increase. You probably want to get something under contract sooner rather than later. And if interest rates come down, great, you can refinance. And I know that affordability is tough. I know that. I know there are people out there that can't afford to buy a house anymore, and that sucks. I wish there was something that I could do, but I can't. The only thing that you can do is make the decision to buy a house now if it's something that you're going to consider in the next few years, because it's only get more expensive. Now, if you have a home to sell, that's great, because the value of your current home is going to continue to go up. You might end up being in a wash where you're going to make up as much on your sale as you are on the purchase. So that's fine. But just understand that these prices are not going anywhere. Interest rates may go up, they may come down. What if they go up more? What if they go up to 7% again? You need to think about that. This market is really tough to navigate. If you have questions about it, please call me. Please call someone that's a professional. I talk to people every day who say, oh, I'm just going to try and buy by myself. I'm going to try and sell by myself. You guys, this market is nutso. It's very difficult to navigate. Now, I have a buyer that went under contract this morning. Yay. Congratulations to my buyer. Very excited. We were in a multiple offer situation and we were able to win. So that happens quite a bit for our team. We know how to navigate this. We can help you get a house under contract. Or if you're a seller, we know how to do that too. We've got a lot of homes that are hitting the market for our team that we're really excited about. So give me a call. Let me help you. I would love to do that, please. My number is 815-529-0777, or you can always reach me at mirandaaltteam@gmail.com. If you have any other questions, please reach out to me. That's what I'm here to do. I'm here to help. And this market's tough, but we're going to get through it. And hopefully 2025 is going to be better. I'm really hopeful about 2025 and 2026. I think we're going to start to climb out of this. Hopefully we'll have some more inventory. Hopefully, it might get a little bit easier to navigate, but we'll see. I'm Miranda Alt with Keller Williams Success Real Estate and the Miranda Alt team. Thanks so much for watching. Have a great rest of your Monday. Stay warm. Bye.